Hello, hello, hello. Welcome to Al Stock Trades. Hope you're having a wonderful start to your guys' weekend. Sorry for not making too many videos this week. Again, it's been pretty busy. And also, I have some exciting news to share with you guys at the end of the video. So definitely stick around. Please share this video as this is going to be a very in-depth analysis. So put on your thinking caps and let's get ready to rumble. Hey. How you doing, Brandon? All right, let's get to it. So mega analysis for small caps like Clover Health. So just a very 30,000 foot view, smart money versus dumb money. Again, we're starting to see dumb money start to fall off and smart money start to kick back. But we're getting an interesting trend as stocks are actually increasing. But there are some stocks that are decreasing. For example, Tesla, and a lot of them have to do with potentially a tax loss harvesting. Now, if we go ahead and look at this thrust indicator here, we basically start seeing that a maneuver from something that is around a 0.4 or 40% to 60% indicates that there is a momentum building up that is positive. Now, if we go ahead and do an analysis on every time that's happened, you can see that within 1 week to 12 months, it's a very positive return. And in fact, 6 months to 12 months, we're looking at a 79 to 84% positive return at around a median of anywhere between 7 to 17.6%. Am I saying Clover Health is going to go up that much? No, this is the S&P 500. This is a collection. We're going to go to small caps very shortly. So if you look at the sweat breath thrust for small caps, for the first time in years, we're talking, very long time, first official signal in 3 years, we are getting a positive thrust indicator. Now, a lot of these chartered financial analysts and then also chartered technical analysts, the ones that do the technical analysis trading at the New York Stock Exchange, they look at these and this goes in the back of their mind regarding the probability of success. And like I told you, small caps are definitely poised to start leading the way in the near future. Okay. So we'll go ahead and here, Russell 2000 after first swig breath thrust after a year, you can start to see if you were to analyze all of these data points, you can see that within literally 1 month, we're having 89% positive probability that we're going to be in the green, and then it just goes up, and then in between 6 months to 12 months, we have an 89 to 100% return. By the way, we're going to get into the specifics of Clover soon. I just wanted to give you this analysis because this is very important information. There's been a broad and significant thrust among sectors. This is the seventh in most, pretty much in the 70 years. So this is very significant, and we're setting ourselves up for potential roaring 20s, which is why the fear gauge actually keeps dropping now, and the VIX is declining. So if we were to do the analysis, and every time the VIX declines for 7 straight days, and we get these signal points, and if we look at the percent probability, again, it's in the green. So we're getting multiple indicators. Again, we can't just use one indicator and call it the main indicator. That's not how life works. Life is not black or white, it's gray. So looking at all of these indicators, it's starting to set up that we are getting into a position where the M2 money supply is pretty much dropped to a level that we haven't seen in a while, a lowest, and it's getting to a point where the Federal Reserve is potentially maybe ending its relative increase in rate hikes. So this is getting to a point where we're starting to like it, and the markets potentially may start to becoming risk on, right? So if you look at the McKellen oscillator, this is hitting, and this usually hits when it's a great time to buy. So you can see it hits during these dips, these dips in 2018, these dips in 2020, and as well these. And we're starting to get a signal here that potentially this is something we need to go and investigate. If we were to look at the analysis of the McKellen oscillator, we can see the win rates definitely increase above 80% to around 6 months to a year, and that's 11 to 20% return. And again, this is for the SP 500 S&P 500, which is a pretty big index. So this increase is in the trillions of dollars, right? So if we look at the S&P breadth, every time we get into a position where the breadth drops to this location, it's a great signal to get in. And within 12 months, we're getting a 21% median return. Again, it's just another way of looking at it. Now, if you look at Barron's survey, which looks at money managers, the big money sentiment recovers a bit. It was depressed down here. Remember when we had the tech recession and the Silicon Valley collapse a little bit happened, but really the tech recession that started in 2022, we're starting to see a recover. So if we were to analyze this and look at all the times it's recovered in the past, like for example, recovered here, and if we were to analyze all that and do this analysis, we only get a little bit of data points, and the recovery is very positive. Literally within the probability is literally in the 100% that we are going to be green in the coming months. So this is really good to see. Okay. And if we were to look at the major indexes, of course, indexes that have higher beta in terms of volatility, you can see that they increase. But if you look at the Russell's poised to get more than double-digit returns. We're talking 25%. If we look at the retail puts versus over calls, again, you know how there's smart money versus dumb money. We also have access to what large, investors, hedge funds do with their put and calls. But we also get access to retail puts and calls. And we can see here the market's actually starting to become bullish. But yeah, if we look at retail investors, they're actually quite bearish. And you can see that the bearishness, if you look at it here, it's the best time to buy when retail investors are bearish. And if we do the analysis of every time they were really bearish within these signals, we can see we have a win rate in the plus 80%, and we have a median return of anywhere between 2 months of 4% to 1 year of 16%. And again, this is for the S&P 500. So we're talking trillions of dollars. So what this basically, like I told you, retail investors, you got to be greedy when others are fearful. Retail investors are fearful. Who owns Clover Health stock? Majority of them are retail investors. Who is emotional? Retail investors. So you can see these movements parallel the drops for retail majority held stocks. And this is just how the dice roll. So you want to do opposite of what retail does. Well, since Clover Health majority owns as retail, do opposite of what you're doing. You're very negative now, dropping the stock price. And then what's happening? It's a great time to go in. And we've seen this countless of times. If we go look at XLV, you should Google what the XLV is. It's the healthcare collection of stocks. You can see that we recently hit a signal here indicating that healthcare is actually poised to go up as well. And you can see the returns there. Just very quick shout out. We just started a median newsletter page. Sorry, this needs to, what I can do here. Let me go ahead and make this let me make this bread so you can see. But we just basically started this newsletter page on Medium. It's free. Very excited. They gave us the book author check mark here. We just literally started 2 days ago. We have over thousands of views. We write up quick summaries on current topics in the stock market, as well as do some analysis. Palantir, SoFi, Plug that just dropped literally 40%. So check it out. Subscribe. Articles, I'm not going to be putting them on a paywall. Even though Medium is wanting me to, I don't want to. This is like just a way for me to communicate to you guys. It's fundamentnews.com. That's fundamentnews.com. It's going to take a while for this to show up on Google Index. Again, this is I just created this like a day and a half ago. So, and again, this is the nice little article I created, how the presidential cycle influences your investment, unpacking the S&P 500 trends. Interestingly, a lot of articles that get published about stocks are just really terrible. So I just wanted to add a little value out there for the retail community space. Now, again, this is our stock terminal. You can find it at allstocktrades.com. The reason why I'm saying this is we do have a Black Friday sale. You can save up to, actually not up to, it's 50%. Use the coupon code Black Friday. It will be expiring soon. You'll get $1,000 off. So take advantage of this Black Friday sale. Now, let's go ahead and let's go back to Clover Health. Okay. So let's talk. Okay. So first things, what is Clover? What's going on with Clover? Well, Clover's non-insurance side is definitely kicking it in the can, right? It's basically over 100%. So they're losing money on the non-insurance side. But again, Andrew Torrey addressed this. They're going to go ahead and downsize this after another downsize, and they are exploring something within the non-insurance side that they deem will help them become profitable. In regards to their insurance side, they're doing actually great. Their MCR is dropping. They are pretty much profitable on the insurance side. So everything that's Clover is doing, it's doing it in the right direction. So I believe 2024 is going to be the turning point for Clover. If they just focus on their insurance side of things, 2025 won't be scary, because in 2025, if you don't recall, they have 3 stars. But again, they've survived off of 3 stars before, and now that they're more profit orientated, I believe they'll be able to weather the storm. And now again, when the market will become risk on, God knows, but are we in the middle of it? Are we in the beginning of it? Are we in the end of it? I think we're in the middle of it. And I believe that we're slowly, day by day, coming towards the end where the market will go back to being risk on, which means negative free cash flow companies, or companies that have high beta and high growth, will definitely be trading in the revenue multiples, not as much as we've seen in 2020, but definitely precursor in 2018, 2019. I believe we are going through a period through 2011, 2012, and a little bit in 2015 for all the mastering stock market students. For all the companies you've analyzed, historically, the intrinsic value calculations tended to be about near subpar low during those times, but then they accelerate post 2028, and you can start seeing an upward trajectory between 2016 and 2017. So what we're basically seeing right now is they need to go ahead and fix their non-insurance side, making sure that it gets to a position where it becomes profitable, and they're going to end up having to do that. There's no need for them to dilute, according to the CFO, Scott. And overall, I believe that with the new ACO coming out with their, they've gotten some complaints about the program. I believe we are starting to see Clover into a position where it is, and they said that even with all of these tailwinds that they're facing currently right now, they did say that this 3-star rating in 2025 will be an anomaly, in which then they'll be able to rebound from that. But also they said that in 2024, they're going to become free cash flow positive. But don't get confused when they say EBITDA adjusted profitability. No. That's EBITDA adjusted. That's not actually net income profitability. But not to worry. In 2018, my apologies. In 2019, Tesla became free cash flow positive, but net income negative. And then in 2020, they became net income positive. So I speculate that based off of this trend, I do believe that anywhere between 2025 and 2026, Clover Health will be full profitable. I think 2026 is when they are going to become profitable. But then in terms of free cash flow, I believe they're going to become positive in 2024. So the way the game is basically being structured right now is that 2024, they're going to become free cash flow positive. It's going to bump up the stock anywhere between, I would say, $2 to $3, $4. And then in 2025, we're going to get anywhere between the $5, $6 range. And once they become profitable in 2026, completely from a net income perspective, then I believe the market will have all of its rate cuts indicated, and hopefully there's no depression there. And we would basically then start having an interest rate that will oblige Wall Street to basically go into stocks that have high beta and high growth, given the opportunity for Wall Street to go into stocks which will increase the revenue multiples. And then by then, Clover will situate itself into a different position than what it is now. And for all the investors that are in it right now during the hard times, they will basically reap the benefits and the fruits and labors of the hard work and patience of being greedy when others are fearful, then selling to the people that are greedy and becoming fearful when others are greedy, essentially. So some folks are saying we can't see your screen. No, I understand that. I'm just basically giving an analysis right now of Clover Health. This was an analysis on what's going on with the overall market, which is directly paralleled with Clover. This is just my response to this analysis. I'm not basically reading off everything. I'm just reciting from my head. My apologies. Yeah. So I recommend rewatching this video. Like I said, this is a mega analysis. I don't tend to use the word mega without actually meaning mega. There's a lot of data in here. But again, that's all I have to say for you guys. If you enjoyed this video, please give it a thumbs up, subscribe, join our Mastering Stock Market course. We have a Black Friday $1,000 off coupon. And if you would like access to some really cool data analysis and news, visit our Fundament News. And for all of our Stock Terminal members and Mastering Stock Market students, we're going to be publishing our analysis of Chamath Edge. Like I said, I'm paying him $109 to be part of his group, and I take this analysis and be able to democratize it and rewrite it in my own words, and be able to democratize it to our beautiful, amazing people that have subscribed to our platforms. Again, it is a privilege and honor, and I will see you on the next one.